is up, everybody? My name is Craig Curelop, aka the Fi Guy, and I'm here to teach you about financing your next house. If you watched my previous video about how powerful house hacking can be, you'd see that really the power in it comes with these low percent down loan options that pretty much any bank will allow you to do. And so in this video, I want to just show you what my favorites are and for what type of properties, and hopefully you can take some value and this will help you decide on which loan product to go with. Of course, talk with your lender. He'll be able to give you more specified advice, but happy to help here. So the first type of loan you can get is a 3% down conventional loan. Now, what that means is exactly what it sounds like. You put down 3% down payment and it's a conventional loan. Now there is still PMI. Anytime that you buy a property for less than 20% down, you're going to pay PMI. However, it's 3% down. There's not as many contingencies and as many crazy things as an FHA loan would be, so it's very easy to do, and sellers do like this type of loan product. So, it's not like with an FHA, you're gonna need to maybe come in a little higher. 3% down conventional is very good. However, the one caveat is that house hacks can be anywhere from 1 to 4 units. The problem is 3% down conventional only work for single family. So if you're going to do a rent by the room method, a luxury house hack, or perhaps kind of split a single family and rent out the downstairs, then we are able to do a 3% down conventional. So this is really for single family residences, and normally these are only for first-time home buyers at 3%. However, there are some lenders out there that can do second, third, fourth properties at this 3% down. Many other lenders, however, require on your second property and more, you have to do 5% down. It's the same exact loan type, same type of stipulations and all of that good stuff, but you got to pay 5% down instead of the 3% down. Again, this is more for single family. On multifamily, really the only thing you can use is the FHA, which we'll get to next. So this here, single family residence. 3.5% down FHA. This is one that you've probably heard of before. It's the most common in a traditional house hack, which is when you get a duplex, triplex, or quad, live in one part, rent out the other. And this can be used for 1 to 4 units. However, these two can only be used for single family. So I would recommend, if you're gonna buy a single family, you might as well use one of these two. That way, when it comes time to buy your first multifamily, this one is still open. The downsides to FHA is that you can only have one FHA loan out at a time. So if you purchase say a duplex with an FHA loan, you'll need to get enough equity to refinance it into typically a 25% down conventional loan if you don't want to live there again for another year. So this one really works best. The FHA really works best for the 2 to 4 unit properties. If you're not going to go 2 to 4 unit, again, I really recommend you going with one of these. I actually had an FHA on my first property. That was actually kind of my mistake. I went after a duplex and I had to wait 3 years to refinance it. I just refinanced it just a couple of months ago. I would think it was like August of 2020. And now it's still cash flowing, it's still doing well, and now I've got the FHA loan out again. But I was tied behind my back. The only thing I could buy for the last 3 years were single family homes. So don't fall for that same mistake. Now, this one here, the next one is a 0% down VA loan. So the VA stands for Veterans Administration or Veteran Affairs. I can't remember, but it's for veterans is the main point here. And it can be used for anything from 0 to 4 units. However, you have to be in the military and you have to, I'm sure, meet some sort of criteria when you've been in the military. You'll know whether you're eligible for this or not, but it's a great product. However, there are some downsides, right? The appraisals for VA loans are really tough. And oftentimes the appraisers make the sellers fix up more things than they would have on a conventional loan. And sellers know this, right? So sellers don't love seeing VA loans. So if you are going to use a VA loan, you may have to come in a little bit higher. You may have to come in $5,000, $10,000, $15,000 higher than what you would originally have been asking. And then you might have to cover that difference in case, you know, the appraisal does come in low. At the end of the day, if you're buying a $400,000 house like you might be in Denver, and you've got a $10,000 appraisal coverage, you know, you're still buying a house for, you know, 2.5% down, or maybe even a little bit less. Still crazy good, right? But that's kind of like the worst case scenario with the VA loan. So this does work for 1 to 4, but you need to be a veteran. Need to be a veteran. And so the last one I want to talk to you about is the USDA loan, 0% down USDA. And yes, it is the same family, same group of people that grade your meat are going to be the ones giving you this loan, believe it or not. And these people, this is for rural properties. So if you live in Denver or you live in a great metro area, you don't need this product is not for you. But if you do live out in the boonies somewhere, 0% down, people will incentivize you to buy a home out in the boonies, and these properties, you know, they are typically very good cash flow if you can find the renters available. So yeah, this one is for boonies. I guess we'll just do rural, and the more PC word, I suppose. So yeah, 0% down USDA. So I mean, that's it, guys, right? There's really an infinite amount of loan products out there that you could use. I would say these 4 here are the most common that I've seen, and if you can even lump these into one. So it's conventional, FHA, and VA are the 3 most popular that I've seen. Again, talk to your lender, see what's best for you. But if you're on your first one and you're going to get a single family, I recommend these ones. If you want a 2 to 4 unit, I recommend the FHA. And if you're a veteran, just do the VA. It's going to be worth it for you. So I hope you guys enjoyed this video. If you liked it, please, you know, give me a like, give me a comment, a thumbs up. Let me know what you do. Hit that follow button in the top right corner, and please, please, please just let me know. I'm so excited to be here for you guys, and yeah, we'll see you on the next video.